You ever notice how every government on Earth talks about working for you? Stability, growth, opportunity. Beautiful words. Meanwhile, your purchasing power is quietly bleeding out on the floor, and nobody's calling an ambulance. Here's the thing. If you actually crack open a history book, like really look at what governments have done with money over the centuries, you don't find some grand conspiracy. You find something worse. You find the same handful of tricks recycled over and over and over again. Different century, different country, different costume. Same result. Wealth moves up. Everyone else gets the bill. And the truly beautiful part, nobody ever catches on. Not in time, anyway. So, let's talk about it. Let's walk through the greatest financial magic show ever performed, one that's been running for over 2,000 years. And spoiler alert, it's still playing, right now, in your wallet. The oldest trick in the book doesn't even require creativity. It's inflation. And governments figured this out before they figured out plumbing. Here's the setup. A government spends more than it collects. Shocking, I know. Now it's got two choices. Option one, be honest. Go to the people and say, hey, we need more of your money. Raise taxes openly. But that's politically inconvenient. People tend to get angry, sometimes violently angry. Option two, just make the money worth less. Quietly, slowly, so nobody notices until it's too late.
Ancient Rome didn't just dabble in this, they mastered it. 3rd century AD, emperors are staring down enormous military bills. Soldiers don't fight for free. So what do? They start shaving the silver out of the denarius. The coin that used to be nearly pure silver gets diluted and diluted and diluted until eventually you're holding what is essentially a copper disc with a thin silver spray tan. The ancient equivalent of wrapping a candy bar in a gold wrapper and calling it fine jewelry. And the empire? The empire just pretended nothing happened. Same coin, same value, trust us. Meanwhile, prices are exploding, savings are evaporating, wages can't keep pace. Every single person holding those coins was paying a tax they never voted for, never agreed to, and most of them never even understood. A silent tax, an invisible robbery. And here's the kicker. We're still doing it. We just replaced imperial mints with central banks and gave it fancier names. Same trick, same victims, different hats. But Rome was just the opening act. Wait till you see what came next. The Middle Ages introduced something delightful called forced loans. And yes, that's exactly as voluntary as it sounds. Kings across England, France, Spain, they'd walk up to wealthy merchants and guilds and say, "We need to borrow your money." Except it wasn't a request. It was an order with a smile. You say no? Ah, that's cute. Enjoy having your property confiscated. Or worse. Sometimes the crown promised to pay it back, with interest even. How generous. Except repayment came late, or in currency they'd already devalued, or, and this was the really fun option, it just never came. Ever.
The government got its wars and its palaces. The merchants got empty promises and lighter pockets. And the whole thing was wrapped up in language about duty and patriotism and serving the realm. Coercion dressed in a nice suit. And it worked. For centuries. Now, here's where things get genuinely clever. Because by the 17th century, governments stopped just stealing money directly. They built an entire system to do it, automatically. Britain creates the Bank of England. And no, this wasn't some charitable act of financial innovation for the public good. Please. The government was broke from fighting France, again, and needed cash. So here's the deal they cooked up. Wealthy investors buy government bonds. In return, the crown guarantees interest payments. Sounds fair, right? Sounds almost civilized. But wait a minute. Where does the money for those interest payments come from? Taxes. On ordinary people. Duties on salt, on beer, on cloth, on the basic stuff regular people needed to survive. So let me paint this picture for you. Rich investors hand money to the government. The government hands it right back as guaranteed interest, and the funding for that interest, squeezed out of everyone at the bottom through taxes on daily necessities. That's not a bank. That's a wealth transfer machine with a fancy charter. And it cemented a pattern that is still alive today. The safest investments in the world are government bonds, and those returns are ultimately backed by you. Your labor, your spending, your taxes. You are the collateral. Congratulations.
Now fast forward, modern era. You'd think we'd have evolved past this stuff, right? We've got computers, satellites, economic theory coming out of our ears. Surely we're too sophisticated for these old tricks. Oh, you sweet, optimistic soul. Take deficit spending. Governments rack up astronomical debts, issuing bonds that get gobbled up by investors, banks, foreign nations. Politicians stand at podiums and tell you it's for infrastructure, jobs, schools, healthcare. Beautiful things, noble things. But follow the money. Actually follow it. And massive chunks end up flowing to defense contractors, corporate subsidies, and bailouts for companies that probably should have failed. And when repayment time rolls around, do they cut spending at the top? No. They raise your taxes. They inflate the currency. They slash the social programs they told you the debt was funding in the first place. The debt looks like it's for the people. The burden lands on the people. The profits? Those go to the bondholders. Same trick as 1694, just more zeros. And then 2008 happened. And this is where the trick gets so brazen, it's almost impressive. Banks, major, global, supposedly brilliant banks, took absolutely reckless bets. They bundled toxic mortgages into securities, slapped fancy ratings on garbage, and nearly crashed the entire global economy. Bam! The whole system teetering on the edge. So who paid to fix it? Gasp? The banks that caused it? The executives who signed off on the garbage? The traders who packaged the poison? No. Ordinary taxpayers footed the bill. Massive government bailouts, hundreds of billions flowing into the institutions that just blew everything up. And who came out the other side stronger? The same banks. Bigger than before, more concentrated than before, more powerful than before. Privatize the gains, socialize the losses. That's not a bug, that's the entire business model. And the public was told with a straight face that this was necessary to save the system. The system. Not your system, the system. The one that works for them. But here's where it gets really personal. Because governments don't just play these tricks with banks and bonds. They play them with your retirement. For decades, people across the United States, Britain, Europe, they've been paying into government pension systems. Every paycheck, money comes out. And the deal is simple. You pay now, and when you're old, the money will be there. That's the promise. Except, the money isn't there. Governments don't actually save your pension contributions. They spend them immediately, right now, today. And in place of your actual money, they leave IOUs, little notes that say, "Don't worry, future taxpayers will cover this when you retire." Let that sink in. Your retirement fund is a promise that someone else's kids will pay for your old age. That is by definition a Ponzi scheme. A generational Ponzi scheme wrapped in official letterhead and government seals. It works, right up until demographics shift, populations age, fewer workers supporting more retirees, and suddenly, the math doesn't work anymore. So what happens? The government reforms the system. Reform. Beautiful word. It means they cut your benefits, or raise the retirement age, or inflate away the value of what they promised you. You paid in for 40 years, and they hand you back something worth half as much and call it modernization. Sound familiar? It should, because every single one of these tricks relies on the exact same thing: perception. Inflation gets called growth. Forced loans gets called duty. National debt becomes investment. Bailouts are rebranded as stability. Pension cuts are reform. The language is doing all the heavy lifting here. Every word is chosen to hide the same reality. Wealth moving from the many to the few, from the bottom to the top, century after century after century. And it works because most people don't study economic history. They don't understand how financial systems actually function. They don't see the trap until the door has already closed. Now, you might think, okay, these are old patterns. Surely the modern versions are at least more subtle, more refined. Oh, they're refined, all right. Refined like a con artist who's had 2,000 years of practice. Let's talk about quantitative easing, a term that literally nobody outside of finance had heard before 2008. Here's what it actually means, stripped of all the jargon. Central banks created trillions of dollars out of thin air. Trillions. Poof, like magic. They used this invented money to buy government bonds and mortgage-backed securities, the same kind of garbage that nearly sank the world. Politicians and bankers stood in front of cameras and said, "This is necessary. This prevents collapse. This saves the economy."
And technically, they weren't wrong. It did save the economy. For certain people. Asset prices went through the roof, stocks surged, real estate soared, bonds rallied. If you already owned a bunch of assets, 2009 onwards was a golden age. But if you were an average household without significant investments, if you were renting, living paycheck to paycheck, trying to save, the benefits were basically nothing. What you got was distorted markets and rising costs. Groceries cost more, housing cost more, everything cost more. But hey, the stock market looks great. Good for you if you own stocks. Tough luck if you don't. Money creation saved the system for those at the top. It fueled inflation and inequality for everyone else. Same trick, same outcome. Just dressed in a three-piece suit with a PhD. And then there's something I like to call stealth taxation. Governments figured out a long time ago that raising income taxes directly is messy. People notice, people complain, people vote you out. So instead, you tax them sideways. Sales taxes, fuel duties, and the big one, inflation itself. When prices rise faster than wages, and they almost always do, that gap is the tax. You never signed anything, nobody sent you a bill, but your savings buy less every single month, and your paycheck stretches thinner every single year. Imagine your salary goes up 3%. Feels good, right? But prices went up 6%. You feel richer on paper. You are poorer in reality. That's not an accident of economics. That is the economics. Governments love inflation because it quietly shrinks the real value of their debts. Your debts stay the same. Their debts become easier to manage. And the difference? That comes out of your pocket.
This is not a bug in the system. This is the system. But wait, it gets worse, because there's one more trick that might be the most elegant of all: regulatory capture. On the surface, regulations exist to protect you. Financial rules, safety standards, consumer protections. Beautiful, noble, necessary. Except, here's what actually happens. The industries being regulated, they don't fight the regulators. They become the regulators. Railroads in the 1800s, oil companies in the 1900s, tech giants, and Wall Street today. Over and over, the biggest players don't resist regulation, they shape it, they write it, they hire the people who enforce it. They carve out loopholes the size of aircraft carriers while small competitors drown in compliance costs. You see consumer protection, they see a moat around their profits. The government gets to look like it's guarding the public interest. The corporations get to eliminate their competition with the government's help. Everybody wins, except you. And then there's war. Oh, war. The financial trick that never goes out of style. World War I, World War II. Governments issued enormous amounts of bonds and told citizens, with flags waving and bands playing, that buying them was their patriotic duty. Support the troops, defend the nation. And people did. Of course they did. They were good citizens. But those bonds, they were also rock-solid, risk-free investments for the wealthy, with returns guaranteed by, you guessed it, future taxes on ordinary people.
The 21st century version? Trillions spent on wars in Iraq and Afghanistan, financed through debt. Defense contractors got rich, banks got rich, bondholders got rich. And the tab? That got passed to taxpayers. To you. To your children. The trick is always the same. Wars are sold as temporary emergencies. We'll deal with the cost later. But later never comes. The financial burden stretches across generations, long after the last soldier comes home, long after everyone's forgotten why we were fighting in the first place. And the final trick, maybe the most devious one, is complexity itself. Tax codes that run thousands of pages, financial instruments so tangled that even the professionals can't explain them. Government budgets stuffed with hidden line items, obscure programs, and jargon designed to make your eyes glaze over. This isn't accidental. Complexity is camouflage. In ancient Rome, debased coins were at least something you could hold up and see. You could scratch the surface and find copper underneath the silver. It was physical, tangible. Today, the trick is buried in balance sheets, hidden behind acronyms, scattered across programs nobody's ever heard of. You can't fight what you can't see. You can't resist what you can't understand. And that is the point. Make the system too complicated for ordinary people to follow, and the wealth transfer happens in broad daylight. Nobody protests because nobody knows what to protest.
So, why does any of this matter right now? Because every single one of these tricks is currently running right now, today, as you're listening to this. Inflation is eating your savings. Government debt loads are growing larger every year. Bailouts remain the default response whenever markets get shaky. Central banks keep manipulating the money supply while governments pass costs onto the public in forms so indirect, so convoluted that most people never connect the dots. The result is a system, and I want you to really hear this. A system designed to keep you working harder for less real wealth, while the financial elite grows stronger. Not by accident, by design. The lesson from history isn't just that these tricks exist, it's that they always come back. When Rome debased its coins, citizens suffered. When medieval kings forced loans, merchants lost everything. When modern states inflate and borrow, households bear the burden. Different century, different continent, same mechanism. And here's the harsh truth nobody wants to hear. Most people will never escape these tricks because they don't even realize they're being played. They accept inflation as natural, taxes as inevitable, bailouts as acts of mercy. They believe the press release instead of studying the pattern. And that ignorance, that comfortable, unquestioning ignorance, that is the most powerful trick of all. When people forget the past, they can't recognize its repetition. And that's exactly why financial education has never been a priority. An informed public is a dangerous public. Economic history isn't just knowledge, it's a weapon. If you know the tricks, you're harder to fool. So what do you actually do with this? 3 things.
1. Look past the headline. Every time a government announces stimulus, ask who benefits first. When inflation rises, remember, it's not bad luck. It's policy. When new regulations appear, ask who wrote them and who they actually serve. 2. Build real wealth outside these traps. Assets that hold value even when the currency doesn't. Things governments can't quietly devalue with a policy change and a press conference. 3. And this is the big one. Never assume the system is working for you just because it says it is. Systems exist to protect themselves. Not you, never you. History doesn't repeat. But if you don't understand it, it will crush you all the same. The financial tricks that kept Roman citizens broke are the same ones draining your bank account today. Only the vocabulary changed. The only question that matters is whether you recognize them in time. Most people won't. Most people never do. That's kind of the whole point of this channel. And as usual, nobody learned anything. But maybe you did. Maybe. If you want to keep seeing what Money Never Learns keeps uncovering, the subscribe button's right there. Most people will scroll past and go right back to sleep. The Romans scrolled past too. We know how that ended.